Hello, good evening. Thanks, Tony. Thanks for joining and thanks for your time, guys. So we've got I won't go through all the names, but we've got a group of investors here. A couple of them are on mute because they might be traveling, but everyone's listening. I think everyone on the call is very, very familiar with the Asiamet story and progress to date so far. So I don't think that we necessarily have to go through like more of an introductory kind of catch up on things. There were some specific questions which I know that Kevin did collate and send them to you. Mostly some generic issues which I think we should just maybe kick straight off on if you think that's good. I think specifically when all this came about, it was just following on from the noises coming out of Indonesia regarding Freeport. So the first, yes. Do you think we could just go straight on to the our situation as compared to what's going on, and explain what's going on with Freeport to the market there, and then maybe touch on our BKM Cow contract of work.
Yeah, no worries, Sasha, and I think we've sort of been through this a number of times, but happy to go through it and answer any further questions or detail. But look, to put it simply, the Freeport situation and our own situation are completely different and separate, albeit, they are, there's sentiment. It's a very political. I mean, Freeport is one of the largest gold mines in the world. It is the largest gold mine in the world. It's obviously a very large copper mine. It's been operating for 63 years. It's in a semi-autonomous province of Papua in Indonesia, and is a major contributor to, the wealth of the country. It's been operating for 64 years, and if you sort of just think about the numbers, that's two contracts of work plus 4 years. So contracts of work are 30-year periods, and Freeport's had two of those over two 30-year periods. It's got to the end of the second contract of work, and it essentially is looking to negotiate, a third contract of work, of which the government has said, well, guys, the contract of work is a thing of the past. We had contracts of work in place when we did not have a mining law in the country. We now have a mining law in the country, and you guys need to, abide by the mining law of the country. So if it's stability you're looking for, then, we can negotiate sort of separately a stability agreement for a long term. And for those who don't know what a stability agreement is, essentially it's something that sets the fiscal and regulatory terms for a long period of time for major projects. So we have those here in Australia for the iron ore operations. They're considered to be major strategic assets of Australia, and there's stability agreements in place for those assets here. And likewise, Rio Tinto negotiated this, and that's one part of the reason it took so long to get their agreements in place in Mongolia, was because they were looking for stability agreements for a long-term investment and operation. So Freeport looking for the same thing from its Grasberg assets. I guess there's very major capital commitment required to continue that operation. Somewhere in the order of $7 to $12 billion needs to be invested over the next period for the mine to transition from a dominantly open pit to an big underground operation. So, when you got that level of capital commitment, obviously you're looking for long-term stability in terms of the fiscal and regulatory regime, but at the same time, Freeport was at the end of their contract of work. In contrast, Asiamet's contract of work has essentially 30 years to run. So we are relatively early in the stage of development of our COW. Two very different sort of situations, if you like, and we're not the only company that's in this situation. There are a number of contract of work holders in the country. Some have been operating 4 or 5 years. Some haven't, yet developed their project like us. And there's a whole number of generations of contracts of work. So they essentially go from generation 1 to generation 7. We are a generation 6. Under the 6th generation, it's one of the few where a foreign investor can own 100% of a contract of work. For example, the 4th generation, all contract of work holders were required to divest 60% of their contract of work over a period of time, and some of the bigger operations like Newmont's Batu Hijau was under a 4th generation contract of work. Newmont essentially sold down to 36%, and eventually sold out entirely a couple of years ago to Indonesian interests for the remaining 36%. So there's precedence in terms of divestment over a long period of time. Freeport have only divested 12%, I think it is, over a 60-something year period, so probably not surprising. The government would like them to divest a bit more. When they started 60-odd years ago, Indonesia was under a military dictatorship with Suharto. That's essentially, and people have probably heard me say it 100 times, but, there's not many places in the world where you can transition from a military dictatorship where you have, a big archipelago of 80-something islands and much cultural diversity, etc., without civil conflict. So, the fact that Indonesia transitioned without civil conflict tells you that it's a very, very stable place in terms of its population. And these things tend to get overlooked. People are always looking for reasons to find a negative view rather than a positive view. So there's many, many positive attributes to Indonesia. It's a very stable place. It has transitioned to a democracy, had 4 elections now. And so from that perspective, it's good. The fact the country wants to have a bigger say in its natural resources is a natural progression from, having been a very poor country where they needed as much foreign investment as they could get to kickstart the place, to a place now that has probably as many billionaires or more than the UK. So, there's in-country capital, there's people who are interested in resources. It's one of the biggest exporters of coal in the world, and there's been a lot of fortunes made in the resources industry. So, the opportunity to participate in that from locals is naturally a lot higher than it ever was. So that's just a generic sort of overview, if you like. Happy to answer specifics if people have got any specifics.
Thanks, Tony. Lots of detail there. I guess I've got, this call's been driven by the attendees here. I should really turn it over to you guys to see if there was, anything more specific that you want answered. Oh, well, I immediately have spotted something here, and it's regarding the MOU with Indonesia on the existing contract of work. And I think that's mostly regarding royalties and one or two others. There's a question about potential Indonesian partners, which I don't know how much detail you can go into. And I think one point, Tony, that you missed there was Freeport have been paying as the biggest tax, revenue generator for the Indonesian treasury. It's been paying only a 1% royalty all this time as well.
Yeah, no, that's right. I mean, the royalty regime in Indonesia at the moment, including our own, is really what I would say, it's well below global parity. They're currently paying 1%. Some of the things that sort of we've prepared to offer up, I haven't say we have prepared to offer up are changes to the royalty regime, and in fact, in the PEA some higher royalty rates. So, some areas, I think, I guess we take the view that you got to give to get in most developing jurisdictions, and to be a good good investor, some of these things where you're able to, we can give a little bit, but our position currently remains that it's unchanged at the present time. So we have, as we've said before, we are prepared to move on the royalty regime, and some other areas which are really just peripheral things around the edges. I don't think they're not material to the overall investment longer term. In terms of the divestment side, so the Freeport have given an undertaking to divest up to 49% of the operation over time. So I think you just got to put that in perspective. There hasn't been any defined path to getting to that 49% at the moment. That is to be negotiated. Now, over what period of time, how much today, how much tomorrow, is it all today, what's the price, etc., all to be determined. One thing a couple of key points I'd just like to make. I saw that article by that fellow out of Canada, that newsletter writer, which I thought was the biggest load of rubbish I've ever read in my life. If anyone's ever been to Indonesia, and I think, Sasha, you've been there recently, there are no AK-47s wandering around in Indonesia. Indonesia is a very, very stable democracy. It's going to be a top, 5 global economy by 2035. The amount of foreign capital flowing into there in other sectors outside of resources is huge. Chinese, Japanese, US, European, Middle Eastern money going into all sorts of enterprises into that economy. So, that the comparison that guy was making with the likes of Congo and various other places, just ridiculous. In fact, it just, in my mind, it sort of cements that he's not very well informed and an emotional investor, rather than the opposite that he was portraying.
I think he's got a he's
absolutely
pushing people.
Yeah,
his book.
Yeah, but of course we know that. So I think that's just to put that in perspective. So look, the other key point I wanted to make, Sasha, is that we shouldn't be worried or concerned about divestment. As I said, we have always had the view that we would introduce a partner into the project at an appropriate time. We keep getting asked about this, time and time again. It's always been our view that yes, we are talking to a whole range of different parties, and we continue to do that. But why would we transact when our share price is we believe our share price is significantly undervalued, and we've still got a significant runway through to the completion of ability and the project financing. So it's always been our view that yes, we would be happy to, and in fact it's our preference to divest, part of the project, whether it's 20, 25 or 30, whatever it might end up being, at fair value as part of our project financing. So, partly answers one of the other questions a bit further down. That strategy hasn't changed, and it remains that's very much our strategy today and continues to be so. We sort of hope that we're transacting that at 10p, not 5.5p. That's why would we transact today? When we think there's still a lot of value on the table. So, it's just common sense, really. the other last point I'd make on that, just to finish it off, is that there have been 4 transactions that I can recall in the last few years involving foreign entities selling assets to Indonesian entities, and they are the Tokatindung mine, which was owned by Archipelago Resources, was sold to the Rajawali Group. A project was in a company called Robust Resources on Romang Island, was sold to the Salim Group by Robust Resources. The Batu Hijau mine was sold by Newmont to Indonesian interests, and the Kaltim Prima coal mine was sold by Rio Tinto BHP, going back quite a long way, to Bumi. So in all cases, those transactions were at prices which were at or above market value. In fact, there are significant premiums to market value in most cases. So, we shouldn't be concerned about divestment, provided we get the right price for it, for the component that we divest. At the end of the day, that's what it's all about. It's daylighting the value and getting the value, the right value for the assets. So that's sort of, I think nothing's changed there from our perspective, Sasha. It just puts, I guess I'm just sort of reiterating what I've said many times before.
Okay, thanks, Tony. Look, I think that covers a lot of question 1. Unless anyone specifically has anything that they're dying to ask there, how about moving on? Any questions for anyone? All good? Okay. There's a second question on financing though, Tony. I guess it's a bit vague. I think you answered one specifically.
Yeah, look, I have, but Pete, Pete can maybe just throw a few bobs worth in there in terms of what are the options for us, and I think we've been consistent with this over a period of time too, and continue to be. So maybe I'll hand over to Pete just to talk about how we're approaching that.
Thanks, Tony. And obviously, and we've given an indication in the PA and clearly we're working on finding the numbers and all the elements in regard to that as part of the feasibility. But in order to fund a project of that size, it's generally the case in the resources sector that it's sort of a multifaceted approach to funding such projects. And Tony's talked in some detail just then about the fact that part of that may well be the involvement of, and as we said, a preference of a partner. Now, clearly, if you do that, if you complete that step at reasonable value, that's going to go a long way to funding the remaining element of the development, which in that case would be less than 100% of the capital amount. But the other things that we would consider and are actively considering, which is very much the normal approach, is it may well be a debt component with some form of equity component, maybe with or without some sort of offtake or construction financing. So, in the examples we're just talking about, in that example, there's 5 different ways that you could fund the development of your project. So one of the things what we are very heavily focused on in parallel with, if you like, the technical elements of the feasibility work is considering all of those elements, and then as time progresses, we will work out what the best mix of those elements would be to give the best return for shareholders. So again, that's not an unusual approach. It's a very structured approach which we'll have to take. and whilst we can't give you specifics at the minute, it's fair to say that we're working on all of those elements as we move forward. Clearly, with the and Tony's been saying this for some time, but just digressing briefly, that there's been renewed interest, particularly probably in the last 2 to 3 months. But if you look back, it's actually been occurring since the start of the calendar year. But there's renewed interest in the resources market and specifically the copper market. And as that sentiment has changed, you tend to find that the ability to fund projects moves more in favour of the operator rather than the financier. So again, it's about being patient, trying to get that right mix together, and then moving forward with the best outcome. So hopefully that, Sasha, that might deal with question 2.
Yeah, maybe I'll just add there. So what Pete has just outlined is our job right at the moment is just getting as many options as we can on the table. There'll be a debt and equity component. The equity component, we'd prefer, we're all shareholders and significant shareholders, we prefer the equity component to be as minimal as it can be. But, given that if we believe that we're significantly undervalued, which we do, and we still like that at the feasibility stage, then, obviously a project level deal, is a far better deal. And that's why we've been talking about partners and about project level deal. And, we have been very active for, last 9 months, as Pete said, talking to various potential partners. We haven't been in a hurry to do a deal for the reasons I outlined earlier. But, we've also had discussions with product off-takers, and there's genuine interest in the product off-take side, equipment financing. And, the banks in Asia are very actively financing projects in the resources sector now. They are the Indonesian banks themselves, very big appetite for resource financing at the moment. The major Indonesian banks, Maybank out of Malaysia, the Japanese banks are very active in the space. Still a couple of the major French banks, the Aussie banks are missing in action, but, they're really, to be honest, they're not going to be required for this project. They probably won't get themselves there. So look, a whole range of things we're working on, and all that just needs to come together, at the right point in time. So it's about getting options right now.
So Sasha, I think hopefully that deals with question 2.
And 3 as well, I think. The only thing IIs, meaning institutions, and as per the text. So I think Tony's explained as projects moving along, and as the copper market's starting to move, there's been a lot more interest and efforts are gearing up on that side. Certainly on my side, when it comes to booking meetings with any of these guys, whereas a year ago we wouldn't have had a response or wouldn't be able to book the meeting. Now they have been extremely keen. So this, especially after JP Morgan have stepped in, the copper market really moved. I think this will translate into hopefully a lot more interest. And again, it's just it's playing these different opportunities, as far as we see best for the share price and everything else. So potentially move on here. There's a question about the other gold, silver, zinc, and this potentially just being perceived as a copper play. With BKZ drilling to be imminent, I guess if I take this one, I can just say that, as outlined, you will probably be hearing, you guys will hopefully be hearing about all this very shortly, because BKZ is a priority at the moment. Just hold on to, just bear with us there.
Sasha, if I can just make a comment there. It's yes, we are. People are thinking it's a copper play, and I'm glad they are, because that's been our very deliberate strategy to this point in time. What we have tried to, message to people for the last 3 years is that we're focused, and we're focused on copper, we're focused on developing the BKM project and putting shareholders' money to work in a focused manner rather than sort of being dispersed all over the place, getting excited and trying to market per se. That's what's attracted institutional investors to the register. So yes, we are a copper play, but yes, we do have, the polymetallics. The polymetallics would need a completely different set of infrastructure to, significant additional infrastructure in terms of process infrastructure to what we're currently looking at for BKM. But that said, the market's moving and we will now get value in the marketplace for daylighting the value that sits in those polymetallics, zinc, silver, gold and everything else. 6-9 months ago, we could have drilled 100 holes into it and no one would have taken any notice. So there's a time and place for everything. We've just got ourselves, we're focused. We've got ourselves to the point where we've got institutional investors coming into the company because of our copper strategy. We do have a lot of, we're now well funded. We've got money to actually daylight a bit of value in some of these other things. So that's what we're doing now. So again, it's time and place and, clearly aligned to the strategy longer term.
Thanks, Tony. I think that covers that. The next one, do you want to cover that?
You want me to start? And perhaps I'll start and then Tony can add a little bit to it. This is the question about share price. So if we take the view of share price from the beginning of the calendar year, obviously there's been fairly massive appreciation in the share price, which I think is just reward for a lot of the good work that's been done even prior to this calendar year for the previous 3 years. So in that context, there's been great performance. In addition, in the recent capital raise, and clearly capital raises are by definition a little bit dilutive, but there's been appreciation subsequent to that as well. Again, I think sort of a reward for that fairly razor-sharp focus that Tony's invoked on the team over the 3-year period. So we've had, I think, fantastic performance over that period. If the question is in relation to the last month or so, obviously that's a different question. But perhaps maybe Tony might add a couple of other bits to it.
Yeah, no, look, I think maybe expectation. I'm not sure what people's share price is up over 120% this year, and we've traded at 25 to 30% above the last issue price 5 minutes ago. Not too many companies on AIM, sort of have had that level of performance. And it's in a consistent, uptrend. Yes, the copper price is up quite strongly then, but I think our performance, given we've just done an $8 million, raise, is actually strong. We need to push through these levels, and you'll say I actually think it's good that the share price is consolidating. What you don't want is the share price to go up rapidly and fall rapidly and spike all over the place. It actually shows that there's real true value sort of underpinning the rise in the price. It'll consolidate for a while and inevitably move up to the next level. Over the next few months as we start to daylight some of this value in the other areas and deliver the feasibility results. So, not too concerned about that, to be honest.
Yeah. Okay. Thanks, Tony. I think it's been a nice gradual rise up, which is good. Should we move on to the Butong percentage stakes? The next question. At what point
Yeah,
will we
sure.
get up 80% of Butong? Is it linked to completion of BFS? And is there an outline timescale for this? Assuming the IEP is issued, what about 3 months to pay for the 2.8 million? How will this be funded? I think you've obviously got various options, so I'll hand over to you.
Okay. So simply, we sit at 40% now. The way the deal is structured, we had to spend a certain amount of money to get to 6%. That money's been spent on the project. And then at the point of time that we receive the production license, within 3 months, we have to pay 2.5 Aussie dollars, that is, not US, Aussie dollars. At that point in time, we would go to 60%. And then by completing the feasibility study, we would go to 80%. So that's sort of the structure, if you like. So the question is, okay, well, that's good. The time frame on that, essentially, as I said, once we get the production license in place, then we've got 3 months to pay the 2.85. And in terms of completing the feasibility, that would take a couple of years after we receive the production license. Funded and completed. It's a big project, and it's a significantly larger amount of work than KM feasibility. In terms of the 2.875, how's that funded? It's a good question. When the deal was done, this deal was originally done on Butong. It was done as a private company, and it was not inside Asiamet at that point in time, the asset. And hence, the deal was all a cash-related deal. The joint venture partner here has been an extremely good group to work with. They've realised the challenges that faced in the market over the past few years. We've renegotiated that deal 2 or 3 times, and they've always been willing to be flexible in respect of the deal. Since now the asset sits inside a public company, we've had discussions with them about whether there's an equity solution to this. They are known to take equity positions in other companies that they've dealt with, similar to ours, on assets. And, they're open to a discussion on that. So, our objective will be to work with the joint venture partner to get a solution which is, a cash and equity solution rather than a straight cash solution. And, we feel pretty confident, and given the track record of that will be something that will be, readily achievable. But, we've flagged that with them, we've sounded them out, and they're certainly open to the discussion. We just haven't at this point in time because, for the same reason, we've been holding off on a partner at BKM. We keep on adding value to the company and the share price. There'll be a time and a place to have that discussion.
Okay. Thanks, Terry. Shall we move on to the next one? It's one specifically on, I don't know how you want to answer this, but maybe you can just deal with it quickly on target tonnage rates, etc. But there'll be a lot of work going on at these 3 assets anyway, and BKZ, BKW, etc. quite soon. And I mean, I could say that we'll, hope to update you soon on that. So I don't know if Tony, if you want to put any more detail, I'll go to the next question.
No, look, I think it sort of answered itself a bit. Obviously we can't put target tonnages on things at this early stage. Yes, working on all of the above, and very actively working now that we've got the funding in place, and we'll have an update on all of that shortly. In terms of the priorities, initially the first drilling will be at BKZ because that's just the ease of access. and then we'll progressively work through the other areas as we get the access into place. So access sort of dictates the sort of sequence of things. Obviously, we would like to get into BKW sooner rather than later, because what we would like to do, I mean, so while the polymetallics are all very sexy and good from a market perspective and good for daylighting value and hopefully capturing some value, in respect of the feasibility study and the financing of the project, to have a longer tail on the resource and reserve life at BKM, at the BKM project, is very useful for those discussions. So if we can find another 2, 3, 4 years of the same type of material as we've got at BKM out at BKW or at BK South, then priority in terms of the type of material we want to get. But we've just got to get to that when we can get the access in. So that's sort of how that'll be dictated. And there'll be a little bit more, there'll be a bit more information on that coming out shortly.
Okay, thanks, Tony. The next question is on working capital requirements for BKM and assumptions for the drop as the project de-risked, and potentially more information on this. Probably re-optimization, I think, is where this might be covered. And then, would we be looking at modular startups on smaller terms, or go on to just the whole 25 ton per annum? Strip ratio as well. Any questions about moving that down as well? I think probably following on in the results.
So I'll let Pete take up this one, but I assume when you say working capital, you mean capital, as in CapEx.
I think CapEx, yeah.
Yeah. Okay. So obviously and I'm not dodging the question, but trying to be, as honest and as straightforward as we can be. Clearly, the purpose of the feasibility process is to more sharply define if you like, the more preliminary outcomes of the PEA. So I would ask if you could bear with us a little bit. Obviously, we're working through this process, and what that will do is sharpen up these numbers. So, for example, the question about capital, we've got a number out there from the PEA. We're working through each specific step in the from an engineering and metallurgy, environmental, staffing, logistics, and on it goes, point of view to hone down on that number to give us a better indication of what we're working with going forward. And then linked to that, which is embedded in the question, what's our initial startup tonnage? We'll run the scenario, both, all scenarios, if you'd like, is it better to start off at 25,000 tonnes or a number that is different from that? And it'll be driven by economics, economics and risk. So where can we get the best outcome for shareholders to deliver the project, efficiently, at the right amount of money to get the best return? So I know that's not a specific answer to the question that's put down here, but it really gets back to that. It's a bit like circling back to that question about how are we funding it and will we divest. All of those elements will feed into the economic modelling and the physicals to give us the best outcome. So as soon as we come to a landing on those items, which we're working through very systematically now, we can better define that for you. So hopefully that goes some way, Sasha, to answering well, it doesn't specifically answer the question, but to explaining our direction and our objectives.
Yeah, I think just at this point in time, nothing has changed in respect to the numbers and what we've said previously. As Pete says, it's all it's probably pretty hard for the people to understand the amount of work and the level of detail that actually goes on to get to a bankable feasibility level study. There's an enormous amount of work goes on, and it's not just one component. So, you might say, well, why haven't you rerun the pit and shown us what the pit looks like now? Well, what goes into generating an optimal pit, is geotech work, is, a lot of the, you need the final product of the metallurgical test work, the variability across the deposit, the grade, the solubility, the permeability, all of this stuff goes into pits, optimizing a pit. So while it's fairly simple at a high level for a PEA, it's in very detailed and the number of variables that input into those optimizations when you get to this point. As Pete says, unless you've got to do that level of detail to understand the risk and de-risk it as much as you can. But, most importantly, if a bank's going to give you money, he wants to know he's going to get his money back, just like the shareholders do. So, there is a huge amount of work going on, and again, there'll be an update on that coming fairly soon. But we haven't actually come out and sort of put a news release out on that just yet, because we're actually, we're actually assembling a whole lot of new people and consultants and contractors for various parts of it. So, we'll give an update on sort of all of that as soon as we've sort of got all of that into a shape which makes sense to say something about.
Okay, thanks, Tony. What about new copper prices being worked into the BFS? I guess we'll just assume that. Well, I'll let you answer that. But
perhaps I'll kick off, and then Tony can round out a bit more. So, I think we've pretty much answered that with the previous question. But maybe just to remind people, the copper price is at about the level that was our assumption in the PEA. So, like for like, clearly things wouldn't change too much based on the current spot price. But I think more importantly, the points we've just made is there's an inordinate amount of detail getting fed in to get one number out the back end. So that process is underway. So hopefully that in part answers the question. Clearly, we'll provide sensitivities to the copper price also once we get to that point.
Yeah, I think that's the most important thing. There will be sensitivities, but at the end of the day, the price we use will be dictated by what the banks are using. Right now, in our PEA, we used, as most people on the call would know, we used an independent forecast number for the years 19 to 25. And those numbers at this point in time won't have changed. It's only the short-term numbers that will have been updated. So, yes, we'll take the new assumptions into place when the BFS, when the model, the financial models is for the BFS is actually built, provide sensitivities around that, which is the norm. So, but so far our 325 looks like a reasonable number.
Okay, thanks, Pete, Tony. Final question here on the Met results and how they might be going.
Yeah, look, I think it's so, and I saw a mention in another note about the in respect to the short columns and the finish of those. And look, there's still the columns have sort of run, but there's a lot of analytical and diagnostic work sort of got to go on after the columns sort of finish running. So we're actually, there's diagnostic work going on what's left in the columns, on the different size fractions, and then on the permeability. So when we've got, I guess we don't want to sort of go and put out information which potentially could be misleading, in that it's half premised. So we want to ensure that when we do come out and provide information on faults, that the information is rock solid. So it's maybe a little bit of a cautionary approach, but I guess what I would say is it comes from experience, in that you don't want to put out numbers that that you have to go back on later on. So when we do put them out, we'll put them out when they'll be as solid as they possibly can be. But there's still work going on sort of around all of that. In fact, we had a meeting today about the various bits and pieces that we still need to complete before we can sort of provide any detail and go live on the Met test work results. But suffice to say that everything's tracking pretty well.
Good. Okay. I think that covers all these questions. If you've got any time if we're open up to the floor for one or two, I know that you've probably got a rush soon. What do you like the time, Tony and Peter?
Yeah, we've probably got another 5 minutes or so, Sasha. So
okay,
you're right.
Jack, I don't know if you put everyone on mute or not, because I haven't heard a pipe out of anyone whilst the call's been on. But I can see there's 12 people on the call. Do you? Okay. Do we have anyone who wants to touch upon anything?
Tony, hi, it's Steve here. Can I just ask a quick question when you talk about, obviously we're all happy that the share price is stabilised above 5p and is pretty much at the all-time high. When you say you think the share price in the current market is very undervalued, can you just put some flavour around that of what you actually mean in the context of you think it's really undervalued?
Yeah, no, it's a good question. So I guess where we are in respect of the feasibility study, so at the point where we have a fully detailed feasibility study produced, we should really be trading at somewhere around 10 cents per pound of copper project. So that's just for the BKM project alone. Then obviously we've got Butong sitting there where we've got a very large resource. Historically, for those resources that measured and indicated status, we should be valued at somewhere around the sort of 2 to 4 cents a pound in the ground. So there are a couple of metrics. If you wanted to just sort of look at the potential earnings capability of the BKM project alone, and in terms of the cash flow generation, then you could sort of look at those multiples. You could look at the multiples we could look at what the NPV is now on the base project, and then we've got BKMs sitting there plus all of the stuff at BKZ. So I think, Steve, what I'm sort of saying is I still think that the BKM project, we've only just turned the corner on copper, and as we continue to do the work and the copper market improves, we'll get back to more historical type valuation levels for assets. So, if you look at what are the, you've heard me say it before, most of the assets are trading around, previously they were about $17,500 per tonne of annual capacity. Probably now it'll probably be more like $20,000 a tonne. So if you multiply 25,000 tonnes by $20,000, you get a number which says 500, and minus capex at 160, And, so it's not, these are not sort of throwaway lines. They're actually, over many years of experience, we're sort of fundamentally undervalued on most metrics you want to measure. That's before we sort of even start work on BKZ, talk about Butong, and others. So, that's really where I'm coming from.
No, good answer. I understand that.
Sasha, we got time for one more question. It's Steve, obviously.
Yeah, sure. Please go.
Just a question back in terms of investment. So I think one real positive that came out of the recent placing, and probably is partly the reason the share price went up and has started to consolidate, I think, is around the investment of JP Morgan. So lots of private investors would take note of that, particularly as it was a fairly sizable and healthy stake. So it'd be interesting to know your views on that, why they made that investment, and what you see going forward in terms of either them or other institutional investors taking a stake in the company.
Yeah, look, I'll start and Pete can chip in. Few things. So, number one is the stage that, JP Morgan probably unlikely to have invested in us 2.5 years ago. Not because purely where the market was, but also the fact the project was an exploration project. So as we've sort of progressed through the PEA and got to the point where we're halfway through feasibility, we've put we've sort of de-risked the resource by all the work that we've done, put out didn't indicated, some inferred. So resource confidence much higher. The met test work results tracking to our, to what we sort of seen in the PEA. So I think the stage of the project, maturity of the project, and the fact that it's been de-risked significantly, and then obviously with that strategy that we've undertaken, we've positioned ourselves in the market where there's very few copper. In a rising copper market, there's very few development ready projects. Positioned ourselves very well in that we've got a good project, significantly, been de-risked from a resource and partially from a metallurgical perspective, and not being ready to go. And there's probably a couple other points that JP's would have noticed as well. So Pete.
Yeah, so I suppose just to add to that, you recall our earlier discussion about putting together the ideal structure, if you would like, to fund the project, and we talked about that in considerable detail. And as part of that, and in keeping with the fact that the project is now at the stage where it is of interest to these sort of investors, we've taken a very structured approach to start meeting with these larger institutions, and that journey began a little earlier in the calendar year. So it wasn't the first meeting we'd had with JP Morgan to bring them on board. There's a series of if you like, discussions that take place with these parties probably in the same manner that you've met with, Tony many times. So it takes some time to get these people interested, but also you have to have a project that is of interest to them. And I think we now tick both of those boxes, and we will continue to meet with those sorts of organisations. So, for example, in the last raising, we met with a number of institutional parties. JP Morgan clearly were a party that participated, but there were a couple of others that did not because they weren't quite quick enough to get involved. And I would imagine that as we get down the value curve, which is another way of saying reducing your risk as you advance, more and more of these parties will show interest and begin to participate. So it's a journey that we work down, and that they're just one element, an important element, but one element of what may be required going forward. And it's great to have them on board because it generates a lot of interest.
Yeah, look, I mean, just to round out a little bit on that, so just that thematic, I mean, the copper market has moved as well. As I said, we're well positioned. The other bit of the pie is that JP Morgan weren't the only institution that was interested. The generalist funds are now becoming much more active, and we had quite a lot of interest from other funds. Some have elected to sort of leave it a bit longer. Others, didn't make it to the table in time, and some participated to some degree. So I think, in general, from an institutional investment perspective, we're in good shape, and that reflects sort of all those things.
Okay, thanks, guys. Look, I'm conscious that we take up quite a lot of your time, but on behalf of everyone, many thanks, and hope that covers anything. If anyone has any other questions, and I'm sure you'll be in touch, and I'll try and organise it. Tony, I know you're probably late for something, so shall we drop off now and let you go?